Good morning, everybody. Welcome to the latest edition of Talking Ball. It's the 6th of June. I'm Joe, joined by Steve. Good morning, Steve.
Good morning, morning.
All okay?
Yeah, all good in the hood.
Superb.
Nice of you to come back in. Lovely.
Yes, nice to be here. Okay, let's get into it, Steve. Let's go through the latest headlines, see what is moving markets. As always, if there are any requests, if there's anybody looking at certain markets and wants an opinion on them, feel free to post them up and we'll do our best to cover as many as we can. So yesterday, Eurozone economic confidence dips. The Sentex Eurozone Consumer Confidence Index slipped to minus 17 for June from minus 13.1 previously and weaker than the expectations of minus 15.2. According to Sentex, the main difficulties are in Germany, which is dragging down the Eurozone economy. The US services ISM index retreated also. The index retreated to a 5-month low at 50.3 for May from 51.9 previously and below the consensus forecast of 52.5. There was a limited slowdown in new orders growth and a steeper slowdown in new orders, while order backlogs contracted at a faster rate. The Fed expectations have also edged lower following the US data that we've seen. Markets cut the chances of a June rate hike to below 20%. The chances of a July hike are held above 60% for the time being. The ECB stays hawkish. The ECB President Christine Lagarde stated that there was no clear evidence that underlying inflation has peaked, while wage pressure has strengthened further. Bundesbank head stated that several more rate hikes are likely to be necessary. The US dollar surrendered some of its gains yesterday and retreated after weaker than expected US data and the hawkish ECB rhetoric, with the currency index close to the middle of the range that has prevailed over the previous 2 weeks. And the RBA, the Reserve Bank of Australia, has surprised the market for the second successive meeting with a further interest rate hike of 25 basis points, taking the overall rate to 4.1%. And the RBA again warned that inflation was too high and it will take some time before it's back in the target range. Although it has peaked. So, yeah, plenty going on. Let's get into some charts. Steve, how's this all impacting cryptocurrencies over the past 24 hours?
Yeah, it's negative impact on Bitcoin at the moment. I don't know whether it's been a lot of the headlines. Did you say the RBA did raise rates?
Yeah, they did, 25 basis points.
Oh, right. Okay. Definitely against expectations from yesterday. So, surprising.
Yeah.
Yeah, I'm going to share my screen and show off the charts that we've got lined up. Bitcoin definitely took a hit yesterday, and we can dive into that. We've been talking about this. Oh, what have I got on there? I know what it is, but
A comparison of some sort.
I think that's a VIX index. Let's get rid of that. So I was looking at volatility yesterday, reading about how volatility, when it does spike higher, generally markets come off. So I was wishing it on the indices, obviously. Anyway, it's worked on Bitcoin. We've had a further retracement down to the 25,400 level. It's a level which I've been talking about for a few weeks now, where we've broken up through that neckline, which we broke up through week of the 13th of March, but projected higher above it, didn't quite reach the measured move target of this inverse head and shoulders formation. And I said that potentially we could have a retest of this 25,400 before maybe the decision comes. Are we going to attempt that launch higher into that measured move target, or have we reached 31,000 and given up the ghost? So really need to see where that closes at the end of the week, really, to sort of like get a better idea. But even on a daily basis, we look to be topping out at these levels. We've got a normal head and shoulders formation, which is a topping formation, and we've retested that neckline, superseded it actually, and then rejected and moved lower. We've taken out the support level coming in that was there at 25,800, which was the dip and the low on the 12th of May and also the 25th of May, and we're below that at the moment. So overall, this looks pretty bearish. We've got a daily close below the neckline, so I would be more bearish on Bitcoin now than I have been for a little while. So next real level of support down towards that 20,000 level. And we have got interim supports all the way down, as you can see from this price action that formed multiple highs and lows. Let's take a look at the 4-hour chart quickly. Obviously, the hourly and the 4-hour after that break are below the Ichimoku cloud. Yeah, probably resistance coming in just above at the moment, but only at that sort of like previous dip. So apart from that, we've got maybe 27,000 acting as a secondary resistance. Ethereum followed the move and broke down, got down to 1776, which is just above the support level at 1762. The next level below that is around about the 1738 level. So they're the next targets on the downside, although that 4-hour candle has formed a bit of a bullish hammer. So we'll watch price action quite closely over the next 12-24 hours to see whether we can pull back above resistance, which probably comes in around about that 1823 level and above. But yeah, potentially, are we posting a higher low, or is this just a little sort of testing the water to see what sort of like support is down there? XRP also broken down. That was outperforming the others on a percentage basis. Got up to that 54.60 level. Broke down quite aggressively around the same time frame. Got down to 48.60 before settling above the 50-cent level. That's where support is, and we've got support from the cloud as well for XRP. So that's looking a little bit more positive. Gold, obviously, this had a bit of a move yesterday. Also, we had last week's indecision has really sort of hammered out a couple of levels we should be watching. This 1933 level of support on the downside, and above we've got 1985, and we're trapped within a bit of a range at the moment. Price action from Friday after the very strong non-farm payrolls led to dollar strength and gold weakness, obviously. Broke down. We got down. The low yesterday was 1938. I think that's around about when we were chatting on the Talking Bull show yesterday. I think we were trading around 1940, and I was I was looking really to go with the flow, but only if we really broke that support level, and it was a bit too early, a bit too far away. So it did worry me that we could get a reversal. Timing was wrong, and it did happen. So reversal went up to 1964. We've been up there as well this morning. Retested it, trading at 1960. So on the shorter term charts, we are challenging the cloud resistance. 4-hour charts just above it. So looking quite healthy. That dollar weakness, if that's to continue, again, I'll expect a move up towards that 1980 area. And the hourly chart the same, being challenged. Crude oil, looking at that from yesterday, obviously over the weekend we gapped higher, mainly on the back of OPEC plus nations, Saudi Arabia in particular, cutting oil production from 10 million to 9 million barrels a day. And that's had a bit of an impact. We opened up higher with a gap. The gap got filled, and we've extended well into Friday's price action. So it looks like that the work that the Saudis and the OPEC Plus did hasn't really worked in their favor. Cutting production is a way of getting more money for your barrels of oil, and that hasn't really worked. We stalled at resistance just around about the 74.50 to 74.70 level in WTI crude oil. Reacted lower. Next support level comes in around $67. But yeah, on the back foot this morning, trading at $71 at the moment. Brent crude oil, similar sort of price action. Topped out at 78.13, just in front of resistance at 78.48, and extending lower again this morning, trading at 75.50 on Brent crude oil. Support coming in down at 71.54. Yeah, that's about it on the commodities. Unless anyone's asked for anything particular, I think someone's requested DAX, which I'll take a look at. DAX, it's DAX 40 now, not the DAX 30, but I'll definitely take a look at that. Yeah, I'll let you dive into the dollar, Joe.
Okay, lovely. Let's do that then. So let's. There are a couple of requests for some currencies as well, but we'll start off with the dollar index as always, and A bit mixed really here. So we've had some mixed signals on this over the past few days or so. So we rallied into this significant area here of resistance that we had marked at 104.20. A couple of large wicks on the candles. Then we saw this nasty looking one on Thursday last week, but then recovered pretty swiftly on Friday. A little bit undecided yesterday, and same again today really. So just kind of stalling into these resistance levels at the minute, potentially consolidating, maybe ready for a fresh move to the upside. But as you can see on the right of my watch list, there is a lot of green, all concentrated around the Aussie pairs today, given that we've seen this surprise rate hike from the RBA overnight. But let's take a look at Euro US dollar as well first. So we can see here again, mixed kind of price action. We broke out through the channel to the downside. Then we formed this kind of wedge formation, which we broke up through on Thursday, and we're still above it for the time being. But again, price is a little bit undecided, not really roaring off into the distance as we'd expect. So pretty mixed there. Let's take a look at cable. And guessing that we're going to see a similar sort of thing. Yes, prices continue to track sort of sideways really in the short term, so not an awful lot going on here at the moment. Let's take a look at some of these Aussie markets just to see what's happening here. So Aussie CAD trading within a bit of a wedge formation, big move to the upside into resistance as things stand today. That's 89.43. There were some interesting ones potentially forming. Aussie Swiss looks quite interesting. Big downtrend channel that's been trading in for a long period of time, but coming close to potentially breaking through a neckline here at 60.52 to complete a nice double bottom pattern. And if it can do that, then we'd suggest that a measured move higher could play out towards potentially 62.50, which also roughly coincides with the upper boundary of this downtrend channel. So that would be a potentially nice setup if it does break above that on the daily chart. Aussie yen, interesting too, rallied into resistance from back on the 14th of February earlier this year. That's at 93.06. We rallied into it today and initially failed, had a bit of a pullback, but that's obviously had a very big move to the upside of late. Overall trend arguably still remains on the bearish side. And if we take a look at Aussie versus the US dollar, we can see prices pulled back into the neckline of this head and shoulders bottom pattern that completed back in November last year. So we've come back down to that level, found support very nicely, and then over the last 4 sessions, there's been some pretty impressive upside momentum. Will that continue? We'll have to wait and see, but there is stiff resistance up here at 67.93. Okay, so onto the requests. Let's take a look at Sterling Oz. Obviously, that's been impacted as well by the overnight move, down by 0.72% as things stand. If we scroll back to the left-hand side, we can see there is significant resistance here on this blue line at 191.52. This goes back to August 2021. And as you can see, we saw a big test of that level again in February 22, followed by another one that we've just done in recent sessions, and prices have rejected pretty aggressively from that level. In the shorter term, we can see that there are multiple touch points along this short-term uptrend line, which today have been broken. The longer-term uptrend line comes in roughly around 84.61. So it looks as though prices may continue to move lower in the short term towards that level. If we look at some horizontal support levels, we can see over here on the left hand side from this period here around December 2022 that there are some potential wire resistance levels should now act as support. We can see it did it there in April, so potentially a pullback into that region. We can't rule that out. That could potentially play out. So at the minute, it looks as though it's on the back foot, being helped by this rate decision that we've seen overnight. Let's take a look at US dollar versus the Canadian dollar, as that's one of the requests as well today. And we can see that prices here have been pretty range bound for a while now. Although we can see there is a sequence of higher lows, we are pretty choppy at the minute. We had big resistance here at 36.51, which prices have slammed into on a few occasions, and it's pulled back. Today we are engulfing all of yesterday's gains and potentially looking set to maybe challenge the resolve here to see if we can continue this sequence of higher lows. So today that comes in at around 133.31. So buying into that level there could potentially be successful on a speculative basis. Obviously, if we get a break below that on a closing basis, then that would pretty much negate this sequence that we put in place and may trigger further losses. We do have obviously these levels to reference as support on the downside, the lowest being at 132.25. So I'd be careful with that one. I don't see any clear evidence to buy or sell it just yet. I'd prefer to wait and see how it reacts at where we expect there to be some support in these kind of regions down here. So I'll leave it there on the currency, Steve. You can take us through DAX, as there seems to be so many people requesting it.
Yeah. Well, obviously we've had sort of like quite negative price action or negative commentary about Germany this morning that Joe's filled us in on. This is the weekly chart in DAX, and we have just a reminder, we've hit this resistance level, formed a new all-time high. It's not a bad effort, but then rejected and gave up most of those gains a week later. And we've extended further last week. However, we did have that rally back on Friday. Non-farm payrolls better than expected. And for some reason, DAX investors thought that was good for them as well, but it's not. So let's remember that the non-farm payrolls is a very US based number. So whatever you can see the world is different, although we are quite linked in markets and reactions. So obviously this week you can see this the small red candle on the weekly chart doesn't give us a lot of information, but if we dive down to the daily, we'll know that that's negative. Monday's price action had a move higher to start with and then closed lower. So we are having a bit of a rollover in DAX. Turnaround Tuesday, they used to call it. So I may be going for this for a gun to head trade idea. So look out. Obviously, any sort of weakness opportunity that I see in indices, I like to jump all over it. This morning, have had no real sort of or overnight has no real movement. But let's take a look at the 4-hour chart, which I like to see price action below. We broke up through the downward trending resistance line. We're back down. We're almost retesting that reverse trend line. And we are trading around, clinging on to that 4-hour cloud at the moment, which although it's red, that acts as resistance. We've broken through it. Will it then turn into support? Not quite yet. I think if we manage to break above the cloud completely, then it's a different story. But until then, I think this shooting star candle that we see from the 7 o'clock 4-hour candle yesterday is quite significant. That put a top in around 16,115. The lows this morning, we've been down to 15,910. So for me, that's where the support is. There's some resistance now, 15,967. We're trading just below there, but I sort of smell a little bit of weakness. And although the last hour we've picked up and reversed the fortunes, well, we're in the last hour, so the last 20 minutes, in fact, are we forming a bit of a morning doji star candle? That's a bit of a worry. But if we want to sort of play this, there's two options here. Really, we've got this support here. We're talking short term, obviously. Support here and resistance here. So this is the channel 15,968 to 15,910. So on an ultra intraday basis, I'll be looking to trade around those levels at the moment. If you're a range trader, you like to sell into the rally, buy into the dip. There's good risk reward. If that was to continue for a few, the rest of the day, you'd be a happy man. However, I like to look for the breaks. I prefer to sell a break below that 15,910 level and go with the flow above, really. But then obviously further resistance comes in a little bit of a way up, maybe around about that 16,000 psychological level. So yeah, I'm a little bit negative. I might use maybe EU 50, have a little bit of a dive into that chart to see. It seems to be sort of giving up those gains now on this hourly chart, so not quite as strong as the Germany 40. So maybe that is more of it's below the hourly cloud as well. I quite like that. Giving away what I'm going to do in gun to head, aren't I? I know Joe's going to jump all over that. Right, let's take a look at what's going on across the pond in the US. The really strong candle from Friday seemed to sort of reverse everything. Looked really positive, but we've given up some of those gains. and we topped out yesterday on the Dow 33,832 and reversed lower from there, and on the back foot again this morning. Nasdaq has been the one that's outperformed, and we can see that fantastic high we got yesterday, but it did end up being a bit doji candle, so a bit of indecision there at the highs. Not really what you want to see when you're just like bobbing merrily along in this like impulsive move higher. But again, we had that indecisive candle last week that was followed by a negative day, potentially negative day today. Who knows? Turn around Tuesday. And S&Ps, this is one that I went long of yesterday, looking for this extension higher. We're getting to it on gun to head. I got stopped out. Well, I actually didn't get stopped out. I got closed out offside. So didn't quite lose 1 hour, lost half an hour, which is a bit disappointing. But we'll run through it now on the gun to head, unless there's any other
No,
questions
all
or. Okay,
good,
lovely.
Steve.
Let's get on to it.
Okay, so this is where Steve and I are going to pick trade ideas live on the stream. As if we had a gun to our head, a couple of basic rules we need to follow. We must have stops and targets on these ideas. We must have risk reward ratios on the ideas and the setups of 2 to 1 or better. As Steve mentioned there, he was closed out of his trade yesterday. That's because we closed these ideas out at 9 p.m. UK time, unless, of course, the stops or the targets that we set are hit prior to that. And we are doing this on a live account, risking 1% of trading capital or less per trade. So that gives us the opportunity to have a long and hopefully successful time trading, because we're not blowing up our account with one single trade. We are taking a very considered approach with what we do here. So Steve, talk us through your idea yesterday.
Yeah, I mean, I was looking at like I was a little bit stuck at that really. If I let me just get what I was looking at from a really sort of, it looked like the move from Friday really sort of extended everything above the resistance levels, really sort of took out the Tuesday's high and looked very positive indeed. And I was looking at further resistance. The next resistance was up at 4,324. So momentum was very strong. It looked pretty good. And I thought, yeah, let's go with the flow. The only real sort of like formation I could pick up on was this little bit of a bullish flag formation here, potentially. The only sort of thing against it was we had a similar type of formation which took out the highs, and so maybe I felt it may not be as strong, but I went for it anyway. Gave the stop. The stop was I felt was a bit wide, but in fact it worked, because I would have been stopped out if I hadn't have put a wide stop in. So that obviously having a wider stop meant my target was a bit further away. I did get some life out of it. It looked quite positive at not quite 1 hour on side, but it got up to 4,300, and that was just a job too far for the S&Ps. And then sort of like now that if I look at it, I'll turn this into an hourly chart or a 30-minute chart here. No, let's do an hourly. And now we're sort of looking at it. Are we potentially forming a bit of a head and shoulders formation? Something like that. I'd like to see a high right shoulder, maybe somewhere up here, and then the extension lower. So, stop level around about that 42.90 or 4,300 probably is the best level to area to have it just above yesterday's high. And looking for that breakdown, because maybe it's not as rosy as we thought, just because non-farm payrolls came out as a good number. I think unemployment rate was higher anyway, so a lot of it was I felt it was a bit more of a confusing figure, but you can't argue with the markets. Yeah, so that's what I did. That's where I ended up yesterday, and unfortunately, yeah, just got stopped out or closed out offside.
Okay, thank you for going through that, Steve. So what do you fancy today? You've indicated maybe some of these
Yeah,
indices.
I was looking at EU 50. The reason I'd look at EU 50 more than the DAX, it's you can get a trade on in the EU 50 because it's smaller contract size. So if you've got a small account, it's a little bit easier to trade, and it does basically follow the DAX very, very tightly. Yeah, I'm looking at the sort of like yesterday's candle for me is bearish dark cloud cover, as it's known. It's sort of like it has a higher high, and the open is a bit higher than the previous day's candle, and breaks down right into the previous day's extended higher candle. So that's not a very positive candle for markets. On the 4-hour chart, we managed to didn't close above the Ichimoku cloud. For me, that's a good sign as well if you're looking to short it. And we're breaking through the cloud to the downside. So it looked like this hourly candle was going to break quite quickly. So I'll try and get this trade on and go with it. It feels like I'm a little bit ahead. I'd rather see a break of this level, but obviously we know we can't have everything. So it'll be somewhere along the lines of getting a bit more out of it now. Let's put the stop at, if we put the stop, I mean, the risk reward there isn't too bad, really. 2.68. I'm happy with that. Let's get this trade on when we can, or we have to do it on Oanda, don't we? Yeah, it's slightly different on Oanda, the spread and levels and everything. Oh, could get 3-1 on here if I'm quick enough. Right, we're going to create a new order here. We're going to sell it at market. We're going to take profit and stop. We're going to risk 1%, and the stop is going to be around about that 43.10. And the target is going to be about 42, down around there. So yeah, looks good to me. Let's get that on. Happy days.
Done.
Job done.
Okay, good luck. Right, so I'm going to take a look at a currency, going to take a look at Aussie CAD. So all of the Aussies have had pretty big moves to the upside today, but the one that's kind of lagging behind the rest at the minute is Aussie CAD. Taking a look at the daily, quite an interesting setup here. We can see that prices have been trapped within this kind of wedge pattern or channel. We can see that prices rallied into resistance here at 89.43, this blue line. So while that's the case, I'm going to try and sell into it because I think that's going to continue acting as resistance. So I've got a level here to sell at, which is 89.33, and I am going to have a stop loss. I mean, I could go above today's highs, but it feels a little bit risky. So I'm going to go over to the left-hand side, look for a decent candle over there to put it above. So 89.67 is going to be my stop. And my target is going to be 88.64. So it's just scraping a 2-to-1 on that today. It is a bit risky because obviously we've seen a pretty substantial move over the last couple of days into this RBA announcement that happened overnight. Have you managed to get that on, Steve?
Yeah, that's on. Plenty of shooting star candles there, boy.
Yeah, exactly. That's kind of what I liked on the hourly. So that's on. So we'll see how these trades go between now and 9 o'clock UK time today. Okay, what's going to move these in terms of data? There's not an awful lot. So we've got Australian GDP, but that's not out until 2:30 a.m. Tomorrow, UK time. So we're going to be well out of our trades by then. And then for the rest of the week, tomorrow we've got Bank of Canada policy decision and also a Canadian employment report, which is due out on Friday. Is that right? 9th? That should be.
Yeah.
Yeah, Friday. Yeah. So not much happening really this week on the old economic front, but markets continue to be pretty choppy and volatile. So do be careful out there. That's it from us, Steve. Going to wrap it up in 30 minutes, which is great. So thank you for participating, everybody, on the chats. And we'll see everybody tomorrow.
Yeah, cheers all.
Thanks.